Hi folks, welcome back to the channel, and in this video it's all about March's Trading 212 and Vanguard portfolio update. There's obviously an awful lot going on in the world at the moment. Pretty much every stock market, every sort of measure of global success is down at the moment, so it'll take you by no surprise at all to know that my portfolio has taken a bit of a hit these past couple of months since the last update. So in this video I'll also take a little bit of time to let you know what I'm trying to do to mitigate all these different fluctuations and times of difficulty in my portfolio. The other thing I'd like to point out before we get started is that Trading 212 have absolutely assured me that the waiting list is beginning to be cleared. I have seen some free shares coming through on my own accounts and on different people's accounts at this stage, so there must be some good news there. If you are interested in Trading 212, then I would suggest that you jump onto the waiting list as soon as you possibly can. The sooner you are on the waiting list, the sooner you're going to be able to avail of all the features that Trading 212 have to offer if you still want to do that when the time comes to get on board. So the new tax year is very quickly coming around, and I don't know if Trading 212 are going to be ready to welcome the next batch of users to the platform. I know a lot of you out there are probably giving some thought to where you're going to be putting your stocks and shares ISA this year, and it may or may not be Trading 212 depending on whether you're already on board there or not. What I will say is that over this last year, after I jumped ship from Vanguard to try out Trading 212 for a year, it has been pretty successful. There's been a lot of mixed press, shall we say, for Trading 212 over the last 12 months, but I will say that they've only ever been good to me. I haven't had any issues with the platform whatsoever, and I wouldn't have any hesitation in recommending Trading 212 as a good general platform, both for investing in individual stocks and for ETFs and index funds. What I would say is that over the last 12 months, I have found my own strategy changing very much, leaning towards index funds and ETFs. I find the whole thing just an awful lot less mental load. And over the last 12 months, I have gradually been shedding several of my individual stocks and shares, getting rid of those smaller positions and merging them all into these ETFs, which you'll see in just a little bit. Anyway, look, that's probably enough of that. Let's just get straight into the portfolio and see what's changed. So the first thing I want to point out is that my general invest account has been completely emptied. I have moved everything from my general investing account over to my ISA. And the very simple reason for this is that I wasn't going to use all my ISA allowance this year. There was no chance of it. So in clearing out my invest account and bringing it all into my ISA, I get to maximise, or at least maximise as best I possibly can, my ISA allowance for 2022. Gives the impression that I have invested a lot more this year than I actually have, but if we just tap this little button here at the top, you can see my ISA utilisation is sitting there at around about 82%. If I can get the capital to max that out, I'll probably just take the cash and dump it in here, because once it's in the ISA, then you can effectively lock that for as long as you like and just use it when you feel like it. But if you wait until after the start of the next tax year, then it's obviously going to come out of next year's allowance. And if I'm in a nice position where I'm able to max that out, then I would lose out sort of at the back end of next financial year, if that all makes sense. So anyway, let's just have a quick look here and see what's going on in the ISA. One of the downsides about moving everything from my general investment account over to my ISA is that when you sell up a position and start a new one, well then that effectively becomes a new position, and as a result, all my pluses and minuses, all the reds and greens have all effectively been reset. So even if I was up 100% in my Amazon position, for example, and I sold out in the general investing and brought into my ISA, a new position starts with whatever amount of money I invested at that point in time. So my 100% would become just the next investment. As a result, all these positions here, or at least a good number of them that are now sitting red, are in fact very profitable positions for me over a long period of time. It doesn't really matter apart from anything other than a vanity project, because at the end of the day, the goal here for me is to get £100,000 invested in a stocks and shares ISA. So whether something's 2.6% behind there like Coca-Cola, or whether something's 6% in front for Amazon, it really doesn't matter to me. They're just vanity metrics at the end of the day. But investing nerds love a stat, so what I'm actually doing at the moment is going through all my Trading 212 statements. You can download those from the website, and I'm putting them into Power BI, which is a wonderful analytics and reporting tool from Microsoft. And I'm basically producing charts to see where all my free shares have come from, what all my positions bought and sold, how they're all doing, putting everything together, squashing it all together, and I'm going to come up with some statistics. But I'll put those together for the next video because I haven't quite got that project ready yet. But what that's going to let me see is, how much money I've put into my investments over the past couple of years, what my total is now, what that means in terms of return on investment, how much of that has been made up of free shares, referrals, bonuses, all that kind of stuff. It's just nice to see a sort of big picture. Let's have a quick scan down through the portfolio. So if we quickly go to pies, first of all, and we look at Vanguard ETFs, and we go to the holdings, that's basically where most of my investing is being done. And it's around sort of 5 key Vanguard ETFs. The Vanguard FTSE Developed World, the Vanguard S&P 500 ETF, FTSE All World, High Dividend Yield, FTSE 100, and the FTSE Emerging Markets. Emerging Markets in particular has taken a bit of a beating these past couple of months for obvious reasons. But we'll not worry about that too much. The other pie I have here is the future industry, and you can see there's about £1,800 worth of that, but it's basically made up the Global Clean Energy ETF, an electric vehicles ETF, and a computer gaming and video gaming ETF. Clean energy and electric vehicles in particular I think are going to be big business, particularly with the way the Western world is feeling about oil and gas at the moment, so I'm hoping that these things are going to really move forward, and I'll probably start to direct a little bit more money towards this particular pie as well as my Vanguard ETFs. So that's the bulk of it. As I said, I've really been starting to move towards ETF investing over the last 12 months, and I'm pretty focused on these cheap index trackers. It just really reduces the mental load. I've got enough going on a day-to-day business than to have to track news and follow companies and see what everybody's doing. Just throw some money at a tracker and be happy with average returns. In saying that, I do have some individual holdings. Let's take a quick rip through those. Amazon, a company that makes money in so many different ways, which is one of the reasons why I love them. I have 0.6 shares there. I'll definitely look to increase my holding here if there's any more volatility in the market in the near term. Coca-Cola is another big brand, lots of foodstuffs, lots of drinks, not really going anywhere I don't think. They pay a reasonable dividend and their share price seems to be fairly steady, so yeah, happy to hold 16 shares here. Electric vehicles and clean energy I've already chatted about. Legal & General is a financial company here in the UK, and they've taken a little bit of a hit like most folks have of late, but again they pay a good dividend, good strong company. It may be one that will be culled eventually. All these individual stocks and shares probably are up for the chop at some point in favour of ETFs, but for now they're okay, they're surviving, doing a good job for me. Microsoft's another. Most of the tech companies as of late have been taking a bit of a hammering, but I have 3 shares in Microsoft, I'm very happy to hold. I have 49 shares of National Grid, one of the world's most boring stocks to hold, but you know, half decent dividend and a fairly stable price. Palantir is real marmite for everybody these days. Palantir is actually one of my worst performing choices, despite the fact that my portfolio here says I'm only 8% behind. It's actually an awful lot more than that. It's one of the ones that were moved from the invest account to the ISA, so the counter, the pluses and minuses get reset, but I'm a long way behind on Palantir, but honestly I think they're big business going forward, so I'll probably be trying to add a few more shares here and there as we go. Unilever is another one that's a bit of a staple in a lot of UK portfolios, simply because they have an awful lot of products in your house, a lot of household names under their umbrella. The kinds of things you're going to be buying come rain or shine, you know, the household products, household staples. I have 14 shares here. They pay a bit of a dividend. It's generally, you know, all right. So at the moment, they're hanging in there too. The rest we've already seen, VanEck Video Gaming and Esports ETF, and then the 5 Vanguard ETFs there as well. So overall, we're sitting there at about £6,242, as you can see. If you add that to what I have in my Vanguard investments, just short £17,200, then it comes to a total of about £33,442 now in a stocks and shares ISA. We have dipped, as I say, a little bit since the last update, but that's to be expected given the state of play. But look, I've said it before when things were going well, and I'll say it again when things aren't going so good. This isn't about what's happening today, tomorrow, next month, next year, next couple of years, next 3, 5, 6, 7 years. It's about what's going to happen over the next 10 years, and I'm just going to quietly continue to accumulate as much as I can into these sensible investments, and hopefully in the next 10 to 15 years I'm going to really see the benefits. The strategy for me is just to try and accumulate low cost index funds here, let all that juicy compounding take place, and at the end of it all hopefully have a nice little nest egg to lean on. We may or may not get another portfolio update in before the end of this tax year, but if you are interested in low cost investing, then you might want to check out this video next.